Thursday, September 19th, 2019, Maneco 64, home of alternative economics and contrarian views. Today, aside from looking at the Federal Reserve a little bit early on and the markets, I want to look at the technical picture in gold and what, in my opinion, is a real important technical level in the long term and how that level has held recently. Am I saying that if we break that level, the current bullish move we've seen in gold since the end of May is over? No, I just think it could go deeper, the correction, if we break this level. But for now, it's been holding it. So before I look at the markets this morning, a little bit about the Federal Reserve. For those of you who don't know, I'm not a proponent of central banks. I don't take them for granted. I've got the view that we don't need central banks in the free market economy, that we don't need one. Central banking, as I've said many times, one of the planks of the Communist Manifesto, right? And 12 men and women, what do they know about where the rate of interest should be, right? They know just as much as you and I. So I want to say that before. My motto is always like Ron Paul's motto, end the Fed, right? Let's end the Fed. We need to do that. What about the other central banks around the world? Well, I think if America takes the lead, other countries will take the lead. So that's why end the Fed is so important, not just for the United States, but for the world. So yesterday, from what I've seen, it looks like there were two dissenters. They didn't want a rate cut. They're the same people that dissented in the previous cut. So not really anything new there. There was another dissent though, but that was not dissenting a cut and wanting not to cut, but it was someone who wanted a bigger cut. And I'm not surprised it was Bullard, James Bullard from the St. Louis Fed. He wanted 50 basis point cut. And I saw that Powell as well kind of, put the ball, so to speak, on President Trump's court. He was saying, we've cut twice already, and now it's up to you to sort out the trade war with China. He said this trade war has been up and down, probably while I've been doing my, my press conference, he said. So that's what happened. I saw the markets reacted negatively, the stock market. But then, as you can see here, in the last hour or so, the S&P rallied magically and closed up on the day. So we were down like 25 points, 27 points going into the close. And as you can see here, the market rallied and from a low around 29.77 to finish above 3,000. So you make your own conclusions how that happened, right? It's called the plunge protection team, maybe. Anyway, that's what happened yesterday. I think the markets still probably expect more rate cuts from the Fed. I haven't looked closely, but we'll have time to look into that further. I saw the bond markets, and I won't go through when I look at the markets, the bond markets, because I will talk about it now. It looks like the curve flattened, so it kind of went towards inverting, right? Because right now the 10-year is at 180, which is pretty much unchanged from early yesterday when I made my video, but the 2-year now is at 177. And that curve, that difference yesterday was about 8 basis points and is now only 3. So the curve is flatter. That's not a great signal for the economy. So right now it's 8:20 a.m. London. We've got spot gold 1494, so unchanged. The high overnight has been 1498.50 and the low 1488.86. I will come to the technical level in gold in a minute when I finish going through the prices here. Silver continued to drift lower here. We're down 6 cents or 1/3% at 1768. The Dow is down 110. So that sugar rush the PPT gave the market is fizzled out. We're at 27,035, down 0.4. S&P 500 back below 3,000, down 12.5 points at 2994. NASDAQ 100 future down 0.5% or 40 points, 78.48. Currencies fairly steady. Sterling unchanged or cable 124.73. Euro 110.41, up 0.1%. Dollars down 1/3% against the yen at 108.05, and the dollar is up 1/4% against the Chinese currency at 709.84. WTI crude is at 58.03, and Brent is at 62.88. So we're seeing oil normalize from that spike earlier this week. So now I've been looking at this level for a while. I haven't talked about it, but I think it's interesting to talk about this technical level for gold. Before I go into looking at technical levels for gold, I like to say that I don't trade gold. I used to years ago. And this is just to keep, how can I say, I like looking at the markets and see levels and what precious metals could do. It does probably help me a little bit in the longer term when I decide to accumulate physical gold to know where we could go in the short term. As I've said before, gold is much more than a trading instrument to make money. and that in of itself doesn't make sense. Trading gold to make money doesn't make sense, that saying, because gold is money, right? So you accumulate and you hold gold really to protect your savings, not to have it in paper money, which we know always tends, well, always really, not tends, but always goes towards its intrinsic value of zero. Some currencies take longer than others, but they all, through history, have gone to zero, paper currencies, while gold has maintained its purchasing power. Enough of that right now. So this is the chart I wanted to show you. It's a monthly chart. You can see it goes back to around 2009 or 2008, but we got the high there in 2011 at 1921, and the low in December of 2015 at 1046. And I've done a retracement analysis here, and as you can see, why that 1380, 1375 level was so important, right? Because that retracement level withstood price moves from 2013 until June this year. So for 6 years, that key technical level there, 1380, held. And that level, of course, is the 38.2 retracement, Fibonacci retracement, which is the golden mean, which is the inverse of the 61.8%, right? So those two are very important, but also very important is the 50% retracement. And that happens to come at 1483.82 exactly. And I was looking yesterday, guess where the low was? 1483.40. And I'll show you a shorter term chart so you can see that I'm not messing about with you. And I'll put it back to also, let's see, September 10th, when we made a low as well around that level. So there you go. That's that retracement level there. You can see that line. So that's why it's so important, that level. And that's why you need to keep an eye on that level. I think if we break that level, gold could go further down. The consolidation could last a little longer. I don't have a crystal ball, but all I know is that level is important. And markets, for some reason, yeah, it's a little bit like nature. The Fibonacci retracement, the golden mean, happens in all of nature and even in markets, knowingly or unknowingly, who knows. Anyway, what about silver? Just quickly look at silver. This is a daily chart, and I think the key level in silver here right now is going to be around 1730, only because it had been an important high, let's see, in June last year and also April last year. And ever since we've had the correction from around 1965 that we reached in the beginning of September, that level seems to have held quite well, as you can see there. I mean, the low recently is 1740. So that's the key level to look at for silver, in my opinion, 1730. That's the technical picture for the precious metals. Those are the two key levels, in my opinion. For gold, 1484, 1483, and for silver, 1730. If you enjoyed this video, make sure you hit the like button. If you haven't subscribed to the channel yet, think about subscribing. And if you do, make sure you hit that little notification bell above to be notified of all my new videos. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.